Airports company South Africa is back in the black. The firm, which owns and manages airports such as OR Tambo, has posted an after-tax profit of 472 million rand. That's its first since the 2020 financial year. AXA cited a 16% increase in revenue. It says operating expenditure was contained during the period. Credit losses on trade receivables were significantly lower, and the group's investment property portfolio benefited from fair value gains. Sanlam's posted higher half-year profit. The life insurer has delivered a 40% rise in headline earnings per share, saying it reflects strong trading performances across its businesses. Sanlam's also cited positive movements in shareholders' fund reserves and the acceleration of profit recognition of the Capitec Funeral Joint Venture reinsurance recapture fee. Harmony shot the lights out. The bullion producers delivered record operating free cash flow of just over 12 billion rand, driven by higher recovered grades and a stronger average gold price. Its annual headline earnings, meanwhile, more than doubled. CEO Peter Steenkamp described the performance as exceptional. The miners declared a final dividend of 94 cents, which is 25% higher than the prior period. Pan-African Resources is eyeing higher year-end profit. The African-focused gold producer says its headline earnings per share should register an increase of up to 37%. It cited higher revenue mainly due to the increase in gold sold, and Pan-Africans also pointed to a higher average gold price. Met Air says its progress on its stabilization and turnaround strategy, which will be included in the second half of its financial year. The battery and vehicle component maker says that progress comes despite the short-term effects of a decrease in volumes and elevated levels of debt. The group has stabilized major new projects undertaken in 2023. It says Hesto Harnesses is showing a strong recovery from the significant losses incurred in the previous financial year. Mete has added that ongoing profitability improvement initiatives are expected to improve future earnings and support reduced debt gearing. Metrofile CEO has resigned. The company says Fungwa Serima, who has been at the helm since 2016, will step down at the end of next month, and that's to explore new opportunities after 3 decades in corporate leadership roles. Serima will be succeeded by Thabo Seopa, who is currently an independent non-executive director of Metrofile. In international news, Swedish automaker Volvo Cars slashed its margin and revenue ambitions for a second time in a year, a day after it abandoned its EV-only target, as the impact of tariffs and reduced demand for electric vehicles continue to hurt. Let's take a look at this package report for more.
Volvo slashed its margin and revenue ambitions for the second time in a year. It comes a day after the Swedish car maker, which is majority owned by China's Geely, gave up on its electric vehicle-only target due to the impact of tariffs and lower demand for EVs. EU, US and Canadian tariffs on electric cars made in China have made market conditions increasingly difficult for automakers. Overall demand for EVs has also slowed, partly because of a lack of affordable cars. Volvo Cars lowered its targets for operating profit margin, excluding joint ventures and associates, to 7 to 8% from above 8%. It also scrapped a sales goal of up to $58.4 billion, instead saying it expected to outgrow the premium car market. Volvo walked back margin and revenue goals on another occasion earlier this year. In January, it gave up a target for annual sales of 1.2 million cars annually by mid-decade, which was first announced 3 years ago. Shares in Volvo Cars were up 3% early Thursday, having fallen sharply the previous day on news of the abandoned EV target.
Let's get into markets unusual. We look at how the global trade and agricultural commodities has become a geopolitical tools. And as Gary Alfonso explains, the principle of price discovery sits at the center of this global battle between countries in the G7 and the BRICS political formations. Over to you, Gary.
So this week, with President Cyril Ramaphosa and many other presidents from developing countries around the world in China to talk about greater trade relationships and also greater geopolitical cooperation, I thought it'd be pertinent to talk about price discovery. And you think, has this guy gone mad? What has price discovery got to do with a massive geopolitical gathering of political leaders in China? Well, it has everything to do with what is happening globally from a geopolitical perspective, and also from the way in which global trades are taking place and how currencies and financial systems around the world are being affected by the growing of these two economic blocks in the world. We're talking about BRICS and we're talking about the G7. And almost every single transaction that we do, whether it's within BRICS or in the G7, has something to do with price discovery, because price discovery is the price and the fair price agreed between buyers and sellers globally, and how exactly trades take place and the price at which it takes place. And these geopolitical formations are starting to affect the data and information available. Before we get to that, let's perhaps quickly look at how the G7 and the BRICS formations have started changing and have started globally affecting the way in which trades and also the financial information about trading has become available. So in blue, the G7 countries, and primarily Europe and also Japan there in the Far East. BRICS countries. The important thing to understand about BRICS is that even though BRICS stands for Brazil, Russia, India, China, and South Africa, there are 159 countries around the world that are starting to make approaches to BRICS, that they want to form part of this global geopolitical or global trade bloc. And what that happens with some of the latest countries like Saudi Arabia and now also Turkey, most recently Argentina, countries allowed in as almost quasi-members of BRICS. What started to happen is that as these trades are starting to happen between countries in South Africa, Russia, Brazil, India, much of the information about those transactions are no longer available to the central repositories of global trade. And to perhaps explain, from a G7 and BRICS perspective, what is happening from a GDP purchasing power parity, and this is the forecast up to 2028. An International World Bank survey shows that G7 countries are expected to decline their GDPs to just below combined 30%, and the BRICS countries are scheduled, even current BRICS countries, and not even factoring in new countries coming in, new developing countries, growing to above that, and has already started passing around about 2021, 22, the number of trades in those markets, or the GDP purchasing power parity. Then to try and understand, let's get back to price discovery. Price discovery is simple. It is actually just the agreed price between buyers and sellers globally. And if you look at the graph of, and again, once again, very simple, it's demand and supply. And at some point where it crosses, this is where generally you find fair price discovery in global markets. So if you were in Brazil and somebody in China wanted to buy your avocados previously, what they had to do was to go through the Chicago Mercantile Exchange and buy it in US dollar. What's happening now with the BRICS formation is that countries are starting to trade in currencies other than the US dollar. And what's happening then is the fact that ultimately, as they're trading outside of the US dollar, those SWIFT transactions are no longer taking place, which is the data at the center of price discovery. That is no longer happening, and is happening less and less in the US. And for instance, a market like the Chicago Mercantile Exchange is now having a whole lot of information excluded from BRICS countries. So if we finally look at the projected growth of BRICS countries and the G7 over the next few decades, the most important thing to understand is that, as one can see from the G7 countries and the countries within the BRICS formations, is that the annual growth rates of countries within BRICS are by far outstripping the growth rates of the G7 countries. Even Japan, where you can see 0.9% growth, is on parity with South Africa. And this is the 2024 forecast of the World Bank. And so the GDP growth forecasts of these countries, BRICS is far outweighing it. And the most important current thing happening globally is the fact that the information is no longer available in the core US markets with dollar trades. That means the US market can no longer confidently predict the amount of exports of wheat, grains, etc., from a commodities perspective, and that is causing a little bit of price discovery havoc around the world right now, and it's only set to increase as these geopolitical formations form and become stronger.